Chris, very good to see you. We're going to start with an important question. Are you taking on too much risk? We have 4 signs that you might be. Risk isn't just about the numbers, it's about how you feel when market conditions change. So let's talk through those 4 signs that you may be taking on more risk than you should. First sign, you check your accounts constantly, but how often is too often?
Well, yeah, I would say looking at it daily is far too often, and
Yeah.
because the markets go up and go down every single day, and do not be obsessed with having to log in and enter it on a spreadsheet
Right.
somewhere. A lot of times that just causes extra emotions and extra stress.
Right, absolutely. On that note, though, it is hard to tune out the headlines, right? So, sign number 2, do you lose sleep when the market drops?
Yeah, absolutely. And under our current administration, every once in a while we get some hiccups in the market because of things that the president says, and that can certainly cause people stress. But that's why you have to have your portfolio built around your overall risk tolerance,
Mhm.
and then that, hey, at least the volatility is controlled, or I've mitigated it by implementing a safe strategy, to complement my overall investment strategy as well.
Right. Because when we don't have that plan, we tend to react emotionally. This brings us to sign number 3. You've made panic driven decisions before. It's known as emotional investing. And the best way to explain this is through George Costanza. Explain what we're looking at here, Chris.
Yeah, and I'm a huge Seinfeld fan
Yeah.
here, So, when people get emotional, a lot of times, the market has a real bad day, a real bad week, or a real bad month, and the emotions take over, and you say, you know what? I need to hit the sell button and get out, and then I'll come back in later at some point. And, like you have on the screen here, it's almost, I forget the name of the law that this is, but, when the market's at its peak, that is where sometimes you'll have your most conservative investors want to come in and take risk. And then when the market, like it says here, it has capitulation or despondency at the very bottom, is where people hit the sell button. And actually, that's where the buying opportunities are. So, the best days in the stock market are often right after some of the worst
Right.
days in the
Right.
market. And you do not want to miss the best days.
Absolutely. All right. And then the last sign is you feel pressure to chase returns. This is also known as FOMO.
Yes, the fear of missing out. And
Yep.
gold would be a good example this year. Silver would be a good example as well. That, and, some of the magnificent 7 stocks that people think artificial intelligence, the spending is never going to end. And, it just kind of reminds some of us that are a little bit older of that tech bubble
Hmm.
back in, in the late 1990s, early 2000, 2001, 2002. So that's why, when you're working with a financial professional, that we bring logic, not emotion, to the
Yes.
table to
Right.
say, hey, look, what is your true risk tolerance? Because when
Right.
the market's up 15% for the year, the person's risk tolerance isn't typically what it is. It's when the
Right.
market
Right.
goes down 15% where you get to understand their real risk tolerance. And and that is a moving target as you go throughout your retirement. If you're retired at 62, you still got to have some growth money in there for the
Hmm.
long haul,
Hmm.
and then as you transition and get older, then you can certainly get more and more conservative.
Right. You bring up so many important points, and I think it bears repeating. I just want to ask then, how can working with a financial advisor help us stay in line with our risk tolerance?
Yeah, and I would, reach out to the office at 419-332-0532. Heidi will get us all set up, and she does a real nice job at, helping you, with what you need to bring into a meeting like
Yeah.
that so that we can begin the process. And again, we don't take an emotional piece in this. We look at it more from a logical side of things. And, not all investors have that ability, of course.
No, of course not. Having a plan that's built on data as opposed to how we feel as humans, so important. Chris, thank you for your time today.
Yeah, my pleasure, Aaron. Thank you.
Tune into Chris McIntyre's full radio program and visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntyre. Be sure to subscribe.